Well, good day, subscribers. Welcome into today's video. We got to talk about, and I'm going to show you a lot of important data in this video about the state of the stock market in regards to if we're getting very, very close to peak fear in the market. Now, sometimes folks think, if you're thinking about like if we're in a moment of peak fear, getting close to peak fear, a lot of times people think you just have to like make a gut decision. It's like, oh, I saw this or I saw that, right? Or my cousin talked to me the other day and he's talking about selling all the stocks, so we must be in peak fear or something like that. And I mean, gut feelings are important in the market, right? And they're important for making investment decisions. But at the end of the day, you got to take data into account and look at what the data shows you, right? And so you can kind of understand like what's going on. No different than if you're obviously looking into a company, you're going to look at like growth rates, you're going to look at the balance sheet, income statement, those sorts of things, right? And so that's what I'm going to show you guys here today. That's what I'm going to share with you. And very much like a roller coaster, right? Because the stock market is a roller coaster ride. We all know that, right? And I remember somebody, gave me that analogy a long time ago, probably when I was first getting started in the market, like 08, 09. They were talking about how the stock market's a roller coaster ride. And just like a roller coaster ride, the scariest part is usually not at the end. Many times when you're on a roller coaster ride, it's like it can be toward the beginning is actually the scariest part. Maybe the middle is the scariest part, but very rarely at the end it's the scariest part. Actually, the end is usually the chill part of the roller coaster ride, right? And so when it comes to going through a stock market crash, a major down cycle in the market, a bear market, whatever you want to call it, usually the end of it's pretty mundane. Let's just put it that way. Usually the most fear you're going to get, and when you're going to get that peak fear, is usually toward the beginning of the cycle or like in the middle of the cycle, somewhere in there. And so just important to kind of remember. And I just got to say this before we get into this video and I show you guys all the data. I just want to say, from the bottom of my heart, thank you for all the support you guys showed this week. Obviously, it was kind of a brutal week in terms of like attacks on me and all those various things because of the Voyager. One of my stocks went under, right? And filed Chapter 11. And I knew this day would come. Eventually, one of my stocks, that I owned, like something wasn't going to work out and something took it down, right? And in the Voyager situation, that hedge fund basically not paying up, just it made the company have to file Chapter 11. So obviously it was kind of a brutal week for me out there. But as brutal as it was, I got to say thank you guys for the support. Like it truly means a lot. Like I received a lot of love, obviously, this week. And I don't take that stuff for granted. I just want you guys to always know that. I don't take that stuff for granted. It means a lot. I feel like I lost the team the game. That's kind of truthful how I feel. I played football for like 5 years, and there was one specific year I played quarterback, and man, I can tell you, I felt the wins and the losses so much heavier that year than any other year. I played in, JV. I was a quarterback, and man, when we won, it felt like such a high. And man, when we lost, I remember this one game we played against our rival, and I was horrible, man. I probably completed 2 passes the whole first half. I ended up getting pulled essentially because the game was going that bad, and they put it in the backup quarterback, and we lost the rival. Little did we know, we found out afterward they had actually brought a bunch of players down from varsity because they knew they couldn't beat our varsity. So like, let's bring a bunch of our varsity backups down to JV so we can at least get a win against the JV, man. But there was always whenever we lost a game, it was a very low feeling. And I kind of feel like that in the Voyager situation where I'm just like, oh man, I feel like kind of a bum, right? That was, even though that was not a stock I ever built my brand around, I probably only did a couple of videos ever about it. There was not a tattooed chef. There was not a Tesla stock that I did a million videos about. It was just a stock I owned, but still at the end of the day, like, for one of your companies to go under, man, and have to file Chapter 11, it's painful, right? And especially when you're in the public eye and you got a lot of scrutiny on you all the time, right? So, I just want to say thank you for all the support. It means a lot, guys. Truly does. Alrighty, so with that being said, let's go into this. Alrighty, yeah. So first thing we're looking at is market momentum. So S&P 500 and its 125-day moving average. We're in extreme fear right now. So yeah, a little fearful there. The stock price strength, so net new 52-week highs and lows for the New York Stock Exchange. We're in fear right now. We were actually in extreme fear not that dang long ago, but as of right now, we are actually in fear. A few big stocks can skew returns for the market. It's important to also know how many stocks are doing, or how many stocks are doing well versus those that are struggling. This shows a number of stocks in the New York Stock Exchange at 52-week highs compared to 52-week lows, when there are many more highs than lows. That's a bullish signal, and a signal's green. So obviously right now we're in a, and I mean, if you had been paying attention to the market, like, you see this, like how many stocks are at 52-week lows or very, very close to 52-week lows, multi-year lows. Like, oh my gosh, even if you just go down like the big tech watch list that I have, for instance, right? I mean, my gosh, I mean, everything in sight is very close to multi-year lows, 52-week lows. That's just the way it is right now, right? Very, very few stocks are at 52-week highs or anywhere even remotely close. Like, oh, man, I came across a stock recently that was at 52-week highs. What stock was that? Oh, shoot, I'm having trouble remembering, but I saw it a couple days ago, and I was like, holy smokes, man, this stock's... Oh, it was H&R Block. I think somebody in the private stock group maybe brought it up. H&R Block, I think, is at like a 52-week high right now, and it was just like, it's crazy to like see a stock at like a 52-week high right now when almost everything's at like 52-week lows and multi-year lows. Stock price breadth is in extreme fear right now. The market is made up of thousands of stocks, and on any given day, investors are actively buying and selling them. This measure looks at the amount or volume of shares on the New York Stock Exchange that are rising compared to the number of shares that are falling. A low or negative number is a bearish sign. The Fear-Greed Index uses decreasing trading volume as a signal for fear. And obviously right now, yeah, I mean, it's pretty self-explanatory. We're in extreme fear right now. As far as bonds go, so the difference in the 20-day stock and bond returns, we're in fear right now. And then as far as junk bond demand right now, good luck, okay? Junk bond demand versus investment grade, yeah, we're in extreme fear right now. You know, when you look back, when money's easy, you know, junk bonds can sometimes do very, very well. But right now we're not in that sort of market, so we're in extreme fear there. Overall, right now, for the Fear and Greed Index, we're in fear right now. The previous close, we were in fear. A week ago, we were in extreme fear. A month ago, we were in fear. A year ago, we were in fear. So, you know, when you look at like the Fear and Greed Index, like we've been in fear or extreme fear for a while now, okay? It's been a while. So that's definitely a factor to look at and say, okay, this has been a sustained period where we've been in fear or extreme fear, okay? Next up, I've got to talk about this platform I'm posting this video on, YouTube, okay? Now, there's so much drama on YouTube right now in the finance space that I didn't even want to show anybody's channels and like, you know, videos being posted and things like that, because I'm like, there's so much drama already. I'm like, I'm not trying to call anybody out. But damn it, every time I go on YouTube, the amount of videos that are suggested to me that have recession, this is going to be the worst recession ever, this is a next depression, this is going to be the biggest stock market crash ever, stock market, you know, holy smokers, this ain't no jokers. I mean, it is out of control. The fear on YouTube right now, right? And I mean, like literally, like every video you pretty much almost get suggested. Like, where are the videos about like why is this stock gonna, you know, go up a bunch over the next 2 years? Like those videos are non-existent. All everybody's talking about right now is crash, recession, depression, you know, inflation, like just bad, right? And so, remember, when the consensus on YouTube, think about this for a moment, right? If we go back a year ago or so, the consensus on YouTube was obviously bullish and you know, just positive vibes and like, you know, we're going to go up and to the moon and all these things, right? And that was a year ago, a little over a year ago. And like now we've done, you know, a complete 180-degree switch here, essentially. And now it's all fear. It's all scary headlines. It's all the end of the world, right? And so you got to ask yourself, wait a minute, what's going on here? You know, that's just kind of one of those things I like to look at, right? That's kind of like, okay, now everybody's all of a sudden talking about recessions, depressions, stock market crash. It's going to be the worst ever. People are scared. You know, and to be honest, there's always going to be a certain amount of negative videos put out there in terms of like stock market crash and like those sorts of things, right? And why this is the end of the economy and ... There's always going to be a certain amount of those. And the reason being is, I mean, just be honest, like fear sells better than not fear. Think about it for a moment. Let's say we're in a restaurant, right? And I come up to you and I say, excuse me, sir, excuse me, ma'am, your car is not being broken into out there. It's perfectly safe. You're going to say, okay, weirdo, like get away from me. Cool. Now, what if I come up to you and I say, hey, listen, your car's out there. Somebody's breaking into it right now. You're going to be like, oh, what, call the cops. Like, what, we got to like go do something. Like, what's going on here, right? Fear, it sells very, very well, right? Because as humans, we're like ready to, get ready for a fear situation. And so, there's always going to be a certain amount of that on YouTube, but right now it's out of control. There's only two things going on in YouTube finance space right now. Fear mongering, essentially, and drama. That's it. There's no positive. There's no, the market's got to go up a bunch. Nothing like that, okay? And so that's the market we're in right now. And no one really wants to stick their head out there and try to be bullish right now, because if you try to be bullish right now, you're going to get slaughtered. You're going to get killed in the comments. Everybody's going to say you're clueless. And then especially if the market's down that week that you post that video, so no one really can be positive right now, to be quite honest, right? And so I just look at that as kind of a factor I think is important at least to look at when like everybody is talking about this is the end and this is a crash and recession, blah, 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 right? I think this is important, what you're looking at here, okay? And I think this plays into all this. Adjusted for inflation, this is from Michael Burry, which I'm sure all you guys know from The Big Short, right? And obviously he's somebody that can be very pessimistic on the market many times. Adjusted for inflation, 2022 first half, S&P 500 is down 25 to 26%, NASDAQ down 34 to 35%, Bitcoin down 64 to 65%. That was multiple compression. Next up, earnings compression. So maybe halfway there, he says, right? And so if Michael Burry says we're only halfway there, we're only halfway through the crash, here's the thing, okay? Michael Burry has kind of, because of The Big Short, obviously he blew up to massive fame, right? He had the housing short, and then the movie came out a few years later. Obviously he blew up to massive fame. And so everybody's kind of kept an eye on Michael Burry for all the time in between, right? But now everybody pays attention to him because the markets are crashing. And so in these time periods when the market's crashing, the ones that are kind of the ones that usually are preaching against the market and like, oh, we're in a bubble and this needs to crash and this needs to crash, those ones get the most respect, right? And that's who everybody looks at for guidance, because it's finally happening, we're crashing, right? And so with Michael Burry, like maybe he's right, maybe we're only halfway there. Maybe we have more than halfway there to go, right? Or maybe he's just flat out wrong. And he's been wrong plenty of times, as every single person has in the stock market, right? Yours truly has been wrong plenty of times in the stock market. And every single other stock market investor, I don't care if we're talking about Warren Buffett or you're talking about Michael Burry or anybody, they've all been wrong several times, many times, either about stocks, they were going long, they were shorting, right? The market, where the market trend was going. People are wrong all the time on this stuff. And so maybe Michael Burry's right, or maybe he's just flat out wrong. And we've already seen the worst of it. And we've already seen the worst of fear. We don't know, right? But to just say, well, Michael Burry says this, it's like, cool. That's cool. We got his input there. Awesome. But that doesn't mean like, oh yeah, for sure. He knows everything. Like, no, because he's been wrong plenty of times in the past. Okay. Next thing I want to pull up here is the AAII investor sentiment. So obviously this shows how, and I've showed this many times over the past couple months, because I think it's very important to look at and track like how bullish or bearish investors are for the next 6 months for the market. And what I can tell you is, I've gone through all the historical data for this and backs up like decades. You can go through it all yourself. If you want to go to the website, you can go to the website, you can look through the historical data. And the fact is, there's been several time periods so far in 2022, especially over the last few months, where we've had 3 out of 4 weeks be under 20% of investors bullish for the market for the next 6 months. Now, there's very few years you can ever go back in history and find that we had less than 20% bullish for 3 out of 4 weeks. Very, very few and far between. It's extremely hard to find. And so we're in this rare situation where investors are overwhelmingly bearish on the stock market. I mean, overwhelmingly bearish for the next 6 months. And, it's unsustainable to have this few people bearish on the market. And it's like just a matter of time before some of these bulls starts to turn to ultra bulls, and some of these bears start to flip to neutral, and some of these folks that are neutral start to flip to bullish, okay? And, you just know you can't stay down. If you consistently see, and let me pull back up these numbers so I can show you guys, okay? The historical average is 38% of investors are bullish on the market for the next 6 months. That's a historical average, right? So let's say we had a scenario where 3 out of 4 weeks were 50% plus bullish, right? that would be extremely out of the ordinary. No, actually, we'd have to go up to like 55% or 60%. So let's say 3 out of 4 weeks we are at 55% plus bullish for the next 6 months. That would be a little worrisome. Like, holy smokes, man, why is everybody all of a sudden so insanely bullish, right? And so this is just something to kind of keep in mind, guys. Investors are extremely bearish on the market. I mean, extremely bearish. And, that usually if you have that many people bearish, you've likely gotten rid of a lot of the selling in the market. Doesn't mean you've gotten rid of it all, but you've gone through a great portion of it, okay? Next thing I want to show you is sometimes it just pays to pay attention to these things logically. You can look at things like fear and greed index and look at those into detail. You can look at AI investor sentiment. You can look at social media sentiment, right, on YouTube and things like that, right? But I think ultimately, at the end of the day, you got to sometimes look at what the market's doing and say, what's the market really telling us? And damn it, you know what the market's telling us? The market's telling us, I'm in extreme fear, baby, okay? This was as of a few weeks ago. The NASDAQ was down about 34% from its highs. The IWM, the Russell, was down about 33% from its highs. And the S&P 500 is down about 24.5% from its highs as of a few weeks ago, okay? You know what that tells us? The market's freaking scared out of its mind, right? And it doesn't mean we're absolutely at peak fear, but damn it, it's given us a pretty darn good indicator that it's in extreme fear right now. And it's getting at least somewhat close to peak fear, because the fact is, there's very few time periods you can ever look at in history and find the NASDAQ went down, 30+%. And especially in a matter of a 6-month span, like we saw the NASDAQ go down 30+% in a matter of 6 months, okay? That very rarely happens. So when I look at all these different indicators, it makes me say, I feel like, if we haven't already experienced peak fear, I think we're getting pretty darn close to having that sort of moment, okay? And maybe that's this earnings season. If earnings are really bad, maybe we get to that moment of that last kind of capitulation type fear. I think we're in a different market dynamic. So many people get caught up into the VIX, which is volatility index, and they look at the VIX and they say, I feel like the VIX has to, go to a certain number for us to, call a bottom or get close to calling a bottom or something like that. We're in a different market. In order to get the VIX to spike to insane levels, you really have to have a capitulation type event, right? And maybe we don't get that. We don't know, right? And so, this has just been a grind down, right? And just when I look at everything, I feel like we're kind of in that moment in time where if we're not at that peak fear, we're getting pretty darn close, in my personal opinion. Love to hear your guys' opinion as always. Also, just so you guys know, I've actually made a couple courses free. One's a beginner course, one's a little more of an advanced course. So if you want to get enrolled in that, book a 15-minute call with somebody from my team that will be pinned comment down there, and they'll get you enrolled in that course absolutely free. It'll just ask you a few questions and find out whatever one's the best for you. You don't have to buy anything. You don't have to join the private stock group or anything like that to get access. And I hope you enjoy it, and I hope you get some good value out of that. So much love as always, guys, and have a great day.